Mean, what about banks? They were promising a lot. They've turned out doing even better, I thought, and that's a big weightage on the markets. What do you make of those numbers?
No, absolutely. The consumption story continues. So you do while you see retail credit, which was the key driver for the last 4 5 years, that continues. But now it's being added by corporate loans. So MSMEs as well as large corporates are beginning to now expand. And we must also realize that inflation also plays a big role in this. So when you have inflation of 10 15%, your inventory and the working capital requirement also goes up automatically by 10 15%, because that's the amount of value that you need to carry more because of inflation, if nothing else. That's one of the factors leading to credit growth, apart from the normal cyclical recovery. And the other thing to note is that the differential between some of the uh, bond yields which are traded in the secondary market compared to the credit had come down. So we are seeing a lot less issuances of corporate bonds, which probably means that companies are issuing less bonds and borrowing more directly from the banks because of the reduction in the attractiveness of bond spreads. So that's also one small factor contributing to credit growth, the shift from the bond market to the loan market.
Ah, okay. So you are saying companies previously had that option of not going to banks but doing their own private issuances, and now they are shifting back to raising money from the banks or borrowing from banks.
Yeah, because what's happening is that the bond market has repriced higher very fast because interest rates have gone up, but the MCLR typically acts a bit slower because it's linked to the marginal cost. So the rise in the MCLR has been slower than the rise in the bond market yields. So to that extent, the bond markets are less attractive compared to MCLR. But I think in the next 2 quarters that'll correct again.